G'day everyone, welcome back to Pete's Investing. Today is June 14, 2023. This is the NIKKEI Japanese market update. We've got here the weekly, which is showing a bullish signal, likewise on the daily, so you can take the smaller time frame hourly trades, primarily long. However, we do have a divergence playing out on the hourly, but also on the daily as well. I'll cover that in a minute. First off, on the weekly, we've got this the triple moving average of the price chart and the moving averages of the CCI are very reaching new highs, hence this bullish indicator down here. So primarily we trade with the weekly and daily trend. On the daily, you can see there more clearly, but notice the CCI is in a bit of a downtrend versus the price chart. That's our bearish divergence. So we did have a drawn back here, finishing at that point, and we did have a minor resistance forming there. Now, a couple of things have happened. And we had some targets here, but the prices continue to the upside, and so has the CCI continue to the downside, even though that's showing a bullish momentum on our indicator. So what we're going to do is going to move that indicator, that divergence trend line, that bearish divergence. It is trending down. Let me just expand it. You can see there very clearly it is trending down versus the price chart, and I'll move that to that point, so it's the same point as the CCI. So again, a bullish divergence there versus a bearish divergence on the CCI, and we're going to remove this channel which we drew based on that previous range, and we're going to move these target areas. So what we do now is we'll look at the assuming this continues to the downside and the price collapses. Also, we're going to move this to that new high. That's our new resistance area. So that the divergence hasn't failed yet. It's still playing out. So what we're going to do now is put in our target area. So what we do first off is we draw the our new channel coming down to the most recent lowest candle within that divergence range, and we draw a Fibonacci retracement. You can go back to any particular spot. I like doing probably this little spot here. It doesn't really matter to get a Fibonacci retracement. So what it looks like now is, let's move this first target area to that spot there, which is between the 38 and the 50%, and a secondary target, if it breaks below that first target, will be this 50% to the 61%, and that also correlates with this ascending diagonal line. So that's where we are with the daily divergence timeline. Also now on the hourly, we've got a different divergence playing out. You can see here, this long dotted line is from the daily, so just ignore that on the hourly. But on the hourly time frame, you can see there we had a short-term divergence playing out there in that little bullish divergence on the price chart versus the bearish on the CCI, and that worked. We had this channel drawn there, and it broke below and hit actually both our targets. The first target being the 38 to 50, and the second target between the 50 to 61, and it's bounced from there. So we've got a secondary. So if I draw that from that level to there, you can see there it's still in decline, but notice the price chart would be in decline as well, so it doesn't really make sense. So we move it to that spot there. So let me just get rid of this channel, and I'll get rid of that. I'll draw a new line. So the bullish divergence, let me just get rid of this a bit, it's a bit messy. So the bullish divergence goes, again, we're copying what the CCI is doing, so we go from that point to that point. So again, this is independent from the daily. So you can see there's a bullish divergence on the price and a bearish divergence on the CCI. Notice the CCI is falling off, same as the price. So for us to see let me get rid of these previous targets. This is a bit of a stretch, but we're going to try and measure it anyway. Bring it down to that lowest candle within that divergence range. So if we see the price collapse below that, that's where you enter the short criteria. And in this case, we're going to enter we'll go back to that level in terms of a Fibonacci retracement. Back from there to there. So if it breaks below this level, and it could happen anywhere along here over the next few hours or even days, let's aim for a initial target between the 61% and the 78%. Now, if it breaks below the 61%, that's always a key area to look out for. If it breaks below the 61%, we're going to look at further downside, so it may actually come back and rest on this ascending diagonal line. So first things first, before taking any short entries, we will enter once it breaks below this channel, and our initial target will be there. And I always go for the initial target to make it a bit more conservative in your risk profile. And remember, this is a different divergence to the daily, although they're very similar in terms of their nature. But again, to understand, that's just playing the divergence game. If you want to trade more so in the using the moving averages on both the CCI and the price chart on the weekly, daily, and the hourly, then you take the long trades only, so using long with the weekly, and currently we're in a long position on the daily as well. So you can see there during that long period, while those two areas were long, you would have taken those long trades on the hourly. Notice back here, for example, when you were averaging down, where you don't use stop losses during that period there, and that was from November 21. So if I zoom back to November 21, you can see there near the end of 2021, there were a mixture of long and short trades on the daily. And November 21 back here, end of 21, primarily short trades. Actually, no, there would have been no short trades and no very minimal long trades. So you would have actually not traded that long at all had you followed the weekly, daily trend line. So there were no long trades at all. So again, these back tests, the long back test and the short back test, they trade along with no bias based on the weekly or the daily. They trade throughout the whole period. So again, to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page, where we also scan stocks, currencies, and commodities. Subscribe, like, and share the channel. Thanks for watching, and see you in a future video.